right, good morning for this Wednesday, September 25th. This chart looks a little different than what you're usually used to seeing. But basically this chart is the 3-minute E-Mini S&P 500. This actually has the software that I use. Red bars means that the trend is down based on what I teach, and green bars represent the trend is up. So as you can see right in here, the trend changed from up to down, right? Because the bars started turning red based on everything I teach, okay? This is where the market opened up today, okay, this bar, okay? And if you remember on my 3-part video series, we're waiting for that first half hour to form, right? The first half hour. So this is the 9:30 open, right? Today, 9:30 open. We wait for that first half hour. We wait for the first half hour's range to be put in place. That first half hour range, right? This was the high of the first half hour. This was the low of the first half hour. Okay? This low was 1686 even. So based on the first half hour breakout, we would be looking to go short at 1685 and 3/4, right? 85 and 3/4 go short. And you're looking to buy it back immediately. The profit objective is just a simple 1 point. It's a simple little scalp trade. So you're looking at 1684 and 3/4, right? Just a quick 1 point pop. And as you can see, the market took out that low, right? Let's take a look here. See, this was the low, right? At 9:48, but that was the low at 10 o'clock, the 10 o'clock low. So going short at 85 and 3/4 and buying it back at 84 and 3/4, look what happened, 84 and a half. So the first half hour breakout hit the point profit target. First thing this morning, okay? You'll notice it's a little different. I got a 200 exponential moving average here. I've got a 50 exponential moving average here, right? Real common moving averages that act as great resistance and support, right? And I got something a little different on my charts here. These are the Kiltner channel bands. This yellow line here is the mid Kiltner band. The upper Kiltner band is the light magenta, light blue, and this is the lower Kiltner band. I also use those when I'm trading on an intraday basis. Right? When the market is in a downtrend, you want to be selling pretty much automatically between the mid to the upper band. And you see the first one right here. So the trend turned from up to down right in here, dropped below that 200 exponential moving average right in here, right? And then bounced up between the mid to the upper band back to that 50 exponential moving average. That was a great selling opportunity yesterday. But again, we're talking about today. This is where it opened. So the first half hour breakout, remember, it was the 3rd video in the 3-part video series. That made 1 point today. Okay? So now what we have going on is that the market is a nice counter trend trade. Again, counter is against the trend. So look at the overall, we all agree that the trend is down. The bars are red, right? The bars even, started falling outside or below that lower Kiltner band yesterday. We continued that move this morning. Got the little move to the downside right here. Once it took out that low, took out a point right in here. Okay? And look at what happened. We tested this low, we took it out by 1.25 point, 1.5, and then we created an inside bar, an inside pattern right here. So for those of you that are prone for counter trend moves, remember, counter trend is against the trend. The trend is down, so counter trend move would be you'd be looking to buy this market. So one of my patterns I teach, and you learned this in the 2nd video, is that inside vertical bar, the inside pattern there, right? Where you get the lower high than the prior high, and the low is higher than the prior day's bar's low, rather, right? So a counter trend move to the upside right now is in play when the market took out the high of the when it took out the high of the 1015 bar. That high was 1686 and a half. When it took out 1686 and a half, you could go long and you'd be looking to take profits right in between the mid to the upper band here. Your stop at this point would pretty much be break even. So wherever you get long, you'd stop yourself out, because remember, the overall trend is down. And so any counter trend trade that you put on, right, trying to catch a bottom or top, which would be counter trend, right, you need to be quick and nimble. So again, taking a trade above this high and quickly moving it to break even. Once you hit this mid-Kiltner band would be the thing to do, and you'd be looking to take profits right in here. So let's put on a white horizontal line at the break-even point, which is right there. And your profit target would be like right in there. Let's get exact numbers here. So we'd be look at this. Here we go. 89 1/4. We'd be looking for 89 1/4 on this. Let's see if we can hit 89 1/4. The break even would have been down here. Never would have taken you out. So 89 1/4. We're at 89 even right now. Again, this is a little counter trend trade. Okay. This is something that I teach in my program, the day trading program. Happens maybe once a day. But again, a nice little counter trend move here as it took out that high. Again, testing the low of the day. Took it out right in here, right? Created that inside pattern. Now you've heard me talk about inside and outside or engulfing patterns all over the place. Look at that. Just hit 89 1/4. Here we go, folks. Look at that. 89 1/4. That would definitely be your first profit target, okay, from this buy down in here. Again, when the market took out the high of that inside pattern, that high was 86 1/2, so you'd be long at 86 3/4. 86 3/4, 7, 8. So you'd be looking for a minimum of 2.5 points up to between the mid and the upper band, and you're there right now. Okay? So your first profit target was hit to the upside there. And your second profit target would be a retest of this high, which is 91, and I would put that at 90 3/4 would be the second profit target, 90 3/4. One tick below the prior high. That'd be your second profit target. All the while, I would move that trailing stop up to slightly below that mid-Kiltner channel band right here. Right? That mid-Kiltner is 1688 even. I'd go to 87 3/4 right now. That would be where your trailing stop is. Remember, you've got to remember, the overall trend from the prior day is down. Right? The overall trend from the prior day is down. We already had a nice short trade right here, the first half-hour breakout. That gave you a point. And then we set up a counter trend move, right? Counter trend. Right? Counter trend is against the trend. Again, we took out that low, but marginally, and then created that inside pattern right there. Took the buy as it took out the high of that inside pattern with an initial stop loss below the low of the day. Again, first profit target was right in here. 89 1/4, which is sitting smack dab between the mid to the upper band. Okay, second profit target would be just under this prior high of 91. I go to 90 3/4, all the while taking that trailing stop from break even to locking in some money here at 87 3/4. 87 3/4. The long was at 86 3/4. So you're locking in one full point on the remaining portion of your position. You already took 2.5 points out on your first profit target. Your second profit target would be right up in here. Make sense? Let me pause it. Let's see what we get here. Again, what I've done today is I've layered the chart a little bit for you. I don't think you've seen me talk much about the Kiltner channel bands, right? This is the mid. The upper is right in here, and the lower. And then, the software that I use as well just makes it a little easier. Based on everything I teach, the bars are green when the trend is up officially, and the bars turn red when the trend is down officially, according to what I teach. And of course, I use the Kiltner bands. The 200 exponential is significant because so many people use it, and so is the 50. So I take a look at those, and I've also got a couple other moving averages that I use that I've been using for over 20 years, but they're not on this chart right now. So again, just wanted to show you a couple trades. These usually happen in the morning and in the afternoon, so you don't have to sit and stare at your screen all day by any means. So again, the first trade was right down in here on the first half-hour breakout. Hit a point profit right there, and then created that inside pattern right there. And you'll recall the inside pattern I talked about on the second video, right? The inside and the engulfing pattern. Well, you can also use those patterns for counter trend trades, right? Trying to pick off bottoms and tops when they set up appropriately, and this one did. So when the market took out the high of this inside bar, go long with an initial stop loss below the low of the day. Your risk wasn't that large, and your first profit target was sitting right smack dab between the mid to the upper band, which is the first area of resistance in this downtrend, 89 1/4. So again, 89 and a quarter. If you bought it at 86 and 3/4, 70, that's a 2.5 point profit, and we're locking in 1 full point on the second, on the remaining portion of the position, locking in 1 full point where this white horizontal line is, and we got our second profit target to take us out right up in here at 90 and 3/4. All right. All right, so you might be asking, well, would you be looking to go short here since the trend is down? And the answer would be yes, if I were to get a price pattern, if I see something. It's just, I'm getting a sense that this market's trying to turn higher. Okay? Again, yesterday's low was, back there, tested it right there, bounced up, came down, took it out marginally right there, created an inside pattern. So I'm watching this carefully. So I want to be long this market. I've got a trailing stop. Profit, the second and last profit target actually on this is 90 and 3/4. So I'm going to hold this a little bit longer. Okay, I've actually got this trade on another platform here that you can't see. Since I got a lot of screens here and I'm trying to manage this, so it was easier this time to show you this is how we're doing it. This is how I'm doing this. Now, I just want to show you a little something, so I'm hoping this will help you. I know this video is getting a little long, so I'm going to... All right, I'm back. Look, we got an inside pattern here, so I'm going to bring that up. If the market is able to take out the low of 88 and 3/4, I want to be out of this trade altogether. The long trade, I want to be out, and I'll cancel this order right in here if we're able to take this out to the downside. All right, so again, this low, 88 and 3/4, if we take that out to the downside, I want to be out of my long trade, and so far we're not there yet. I still have my profit target up here at 90 and 3/4. All right, look at this. Well, it has not been able to take this out. We're rallying up. Look at my profit target, 90 and 3/4. Look at that. Here we go. Look at that. There we go. We just hit 90 and 3/4, the second profit target. So now I'm clearly out of this long trade. Okay, again, trade was executed when we took out this small little inside pattern right here. First target was right smack dab between the mid to the upper band, and the second profit target 1 tick below this prior high. Now we take this out. I am no longer long that trade. I'm flat. So look at, not bad. Look at this rally to 91 now. We have turned in a bit here. So hopefully, and this is a little longer than normal, these videos, but I just wanted to show you something really good and solid that you can take, learn, and start watching and paper trading and observing for your own trading to make you a little better trader here. So again, just to quickly recap. So again, for those of you that paid attention to my 3 videos in the last couple weeks, the first half-hour breakout, right below here, good for a point. Actually went 1.25 points in your direction. So the smallest profit target was a point, right? Got that. Something a little new here, counter trend trade here, right? When the market took out the high of this inside pattern. You've heard me talk about the inside pattern many times. Well, this one was a very low risk trade as the market took out the high, go long with an initial stop loss below the low of the day. First profit target was in the first area of resistance, and that was at 90 and a quarter, 89 and a quarter rather. Right smack dab, mid to upper band, right? 89 and a quarter, right there. Right? 89 and a quarter. The second profit target was 90 and 3/4 up in here, and we've taken that out. So not bad. Hope you learned something. If you've got any questions, let me know. Email me, give me a call. Love to hear from you. But again, want to make this a little longer than normal. Just want to give you a little bit more information here and see how you can apply this in your own trading. Hope that helps. Bye for now.